Good morning, everyone. Welcome to my YouTube channel. Um, on today's topic, I want to talk about ranges. Um, First of all, I want you to understand that price moves in ranges and trends. Range and trend. Range, trend. Range, trend. So, price moves in ranges. Now, what is a range? A range in the chart is the generation of interest on both the buy side, sorry, on both the buy side and the sell side. A range in the chart is the generation of interest on both the buy side and the sell side, which means breakout traders are looking to buy the breakouts and breakdown traders are looking to sell the breakdowns, which is wrong. If um, if the market is ranging, range high, range low, range high, range low, the so-called breakdown traders will wait for the market to break below this sell side liquidities. Once that happens, they look for a fair value gap or support and resistance, and then they sell. Then for breakout traders, just the opposite. Wait for the market to break above the resistance level, then they find support, use those levels as support, and then hunt the buy side of any other resistance level. And it's wrong. Okay, it's wrong. One of the rules of range trading says buy the low and sell the high. Do not buy the high and do not sell the low. That's wrong. When you're in a ranging market, you wait for this to happen. Once one of the levels, maybe the low or the high, is taken, you look for reasons to sell. Those fair value gaps, or for the CRT traders, you look for the mode 1 entry, which is tick up close candle that took out these levels. And after that, you use the tick up close candle or down close candle to get into the market and then hunt the sell side. Same thing if the market breaks below those other lows. Mode 1 entry, fair value gap, then you hunt the buy side. I want you to know something. Candles are ranges. If it hits one part of the range, it's likely going to hit the opposing end of the range. So let's go straight into the chart. So I hope you maybe can take a screenshot of this. Now, I want to use this particular candle as an example. This particular one. Now, first let me mark out the high and the low. So as soon as you have an inside candle, that indicates chubby. What do I mean? Once this candle closes and the next candle closes inside the other candle, it's likely going to be chubby for a while before the the buy side of that candle or the sell side will be taken. So if the current candle is trading inside the previous candle, then that is a contraction and you expect volatility to come next. So this is the candle range high and the candle range low. And as you can see, all these candles here, they are all ranges. Candle 1, candle 2, candle 3, 4, 5, 6, 7. They are all ranges. Now, if you're a trader that wanted to buy from here and aim for this buy side liquidity, you get stopped out. If you're a trader that wanted to sell from this particular candle to this level, you get stopped out by this candle. So whenever you're in a ranging market, you wait for one of the levels to be broken, either the buy side or the sell side. So now in this case, we have the GBP AUD dropping down to our time frame alignment, which is the 1 hour time frame. You you will see that everything is we're in a ranging market. This is the low of the daily time frame candle, and this is the high. So we're in a ranging market. Everything is choppy in here. So when this kind of thing happens, you have to wait for one of the levels to be broken. And once that happens, what do? You look for your mode 1 entry, which is the tick down close candle. And as you can see, this is the tick down close candle. This is the tick down close candle. So once that happens, you wait for multiple candles, one candle, any of them to close above this particular tick down close candle. Once that happens, you wait for a retest. And as you can see, this specific bullish candle closed above it. After that, you mark from the wick of the tick down close candle. You mark the wick. And as you can see, the markets tapped it and then rally straight to uh, the buy side of the daily candle. Again, candles are ranges. If it hits one part of the range, it's likely going to hit the opposing end of the range. And as you can see, the market got to this low, took out the daily candles low, mode 1 entry, and then rallies. For those who are in my Telegram uh, group and on Twitter, you can I think scroll back to saying I think I took the screenshot around June. And you can check back. I posted this there, and inside this range, I think I caught a 4-hour CRT, and I will look for it and I'll show you guys. Just like I said in one of my videos, I said when you're in this type of market aiming for this CRT high, whether it's a 4-hour, daily or weekly or monthly, you should be looking for 4-hour CRT. If it's a daily time frame, daily CRT you're trading, look for 4-hour CRTs, bullish CRTs. So I caught this particular CRT, bullish 4-hour CRT. So I caught this and I aimed for the buy side of the 4-hour CRT. And you can also see the kiss of death total soup here inside this key level, which is the fair value gap. So all you should be looking for whenever you are in such market condition is 4-hour bullish CRTs. If you're trading the weekly CRT, you should be looking for the daily or 4-hour bullish CRTs. That's like the major thing you need to do. You don't hunt bearish for our CRTs or whatever. That is wrong. So, as you can see, the market was ranging, took out the daily low, daily candle low. Now it's going to uh, entice all those who are the breakdown traders who might want to short from here. And once they sell from here, the market goes against whatever they analyzed or something, and then they lose money. So please, you can note this down. The rule of range trading says buy the low and sell the high. We are buying the low, aiming for the CRT candle high. If this whole thing happened and then it took out the daily candles high, then we are going to hunt for the low. And why going for that? You look for bearish 4-hour CRTs, not bullish. So I caught this particular trade. I dropped down to my 15 minutes time frame. 5 minutes. So I dropped down to my 15 minutes time frame. And as you can see, this particular candle, this is the candle we're making use of. Market close above it. You can buy from here. And then aim for the daily CRT candles high. Same thing. Same thing with this case of death, total soup. You drop down to your 15 minutes time frame for your entry. So you drop down to your 15 minutes time frame for your entry, and you use this tick down close candle, this tick one, as your entry. Once the candle close above, a candle, maybe multiple candles closes above the tick down close candle, this should be your entry, and then your stop loss should be here. So if you can get those 2 4-hour entries I just marked out, then you're good to go. I mean, you buy from here 2 positions, the 4-hour CRT two positions, the total soup one position. Then you aim for the CRT candles high. CRT low. CRT high. Range. Total soup. Model 1 entry. As easy as it should be. So in summary, when you're in a ranging market, just wait for one of the sides to get hit, and then you take it to the other end. Make sure you use the higher time frame as your guide. Let me show you another example before I leave. Now, this is a range. The high was taken. So you should be hunting the low of this particular daily candle, daily CRT candle. So it's likely going to get to this level. If it doesn't, then it's fine. So any 4-hour CRT you're looking for while this journey to the low of the daily CRT happens, it should be a bearish 4-hour CRT. While in the GBP AUD, it's bullish 4-hour CRT. You can watch this once, twice, or as many times as you want. I hope you found this insightful. I wish you good luck in your trading. Thank you and God bless you. If you have any question, you can drop it in the comments section. I reply every single comment. Be safe.